The Berkshire Hathaway annual shareholders meeting is taking place in LA this year, and it will be streamed exclusively here on Yahoo Finance tomorrow. I want to bring in Krish, Sankar, Managing Director and Cowen Senior Research Analyst. Now, Apple is one of the biggest holdings in the Berkshire Hathaway portfolio. What's your take on Apple's blowout earnings and what that means for Berkshire?
Sure, thanks for having me. Clearly, the numbers from Apple were way beyond impressive. The expectations were actually relatively low, and Apple really blew past all the numbers across all the metrics, whether it was iPhone, iPad, Macs, and services. So it's definitely a very impressive quarter, and clearly the margins have also improved pretty nicely. That kind of speaks to both Apple's scale and also execution. And I think the other thing that has also been a point of concern has been the sustainability of this, which has been the number one question for many investors. But if you roll it all together, Apple is executing way above, and the numbers are extremely impressive, talks to the ecosystem, talks to the loyal install base, and I would probably say in the long run, it's definitely very positive for the stock and for the shareholders.
Krish, I want to ask you about semiconductor stocks, which I know you also follow very closely. And we've seen this pattern where companies are beating, they're guiding higher, yet their stocks are not being rewarded. We saw this with AMD, with Texas Instruments, NVIDIA. Why is that happening? Why are they just not impressing investors?
Yeah, I think it's a very good question. And if you look at some of the names in the what I would characterized as the semi-cap ecosystem, calendar Q1 was a strong quarter for many of these things. You saw the numbers move higher. You saw some of the stocks do really very well. And what you've seen is a lot of the investor views, many of the positive news for this year is actually discounted in some of these names. And that's why you're seeing some profit taking on a beat and raise. And the flip side is that you're seeing some of the small and mid-cap names that actually had what I would characterize as inline numbers or even a modest miss has been punished a lot. Like some of these names are down 10 to 20% the next day. So I think a beat and raise is not being rewarded because most investors are baking in a very strong 2021. So the question happens, what happens in the second half of this year when you get visibility into the calendar 2022? And also keep in mind, some of it is also like positioning from fund managers, moving from cyclical to maybe looking at low multiple names, and also looking at maybe some of the growth names heading back into the back half. So I would say it's a combination of positioning from fund managers, along with the fact that a lot of the good news for this year seems to be discounted by investors.
Well, Krish, Sankar, thanks so much.